Hey, welcome. Good morning, guys. My name is Gavin. Welcome to another weekly market analysis by Alphachain Traders. It is the 24th of October. We still have this is the final week for trading the month of October. Then we head into the month of November from next week, Tuesday onwards. And let's have a quick review of where markets are at this current moment. What I'll do, I'll bring this screen up on this side of the hair. We'll potentially focus the US equity markets in particular. Yeah. So the major US stock averages surged most of last week. Okay. All three majors, which are NASDAQ, the Dow, and the S&P 500, they all posted their best weekly gains since we've seen in June. Okay, so since June. And that's after the prior week where we saw that S&P 500 dropped 2.5% on the Thursday, where the CPI result was released. Okay, so the previous week before. So since then, markets have done a bit of a U-turn. It's been a bit more boisterous, and this sort of close that we're seeing, it's the fifth largest intraday reversal from a low in history in the index. Yeah, we'll just maybe move it to the daily time frame. Just hit the refresh button, so you can see what's happening at the moment. So we've sort of hit a bottom, which was at 3,500 mark. Okay, and that's a sort of a key pivotal support level. Since then, we've seen a sort of key reversal change. We've posted breakthroughs, a trend line in place, a retest of the trend line, and then back up to that resistance, back to those prior highs again. Yeah. The question is there going to be a follow-through? Is that going to be a follow-through? Well, we'll wait and see as we head into the month of November. But at this current moment, what is triggering this boisterous move? What's triggering this bullish move that we're seeing in the markets? Well, it's focused on US third quarter earnings. Okay. Now, the results overall has met or beaten the expectations. Okay, so we have seen, I think it's about a fifth of the S&P 500 companies have reported their Q3 results, and approximately 73%, it's not really an approximate, but 73% have exceeded the forecast, which is still very good. Okay, so that's what we're seeing overall from the earning reports up until now. Now, what I also want to sort of mention, maybe I'll touch on that now. Despite this, we've also seen higher yields high yields in the US Treasuries, and that's at the same time. So what we're seeing is this: it's almost a divergent move, right? So we're seeing equity markets rally on the note that it's being supported by earnings. Okay, so earnings coming in much better than anticipated. 73% came out positive or in line, and therefore we see equity markets rallying that information. But at the same time, in the background, what we're seeing is yields are also moving higher. As yields are moving higher, that is putting a more emphasis that the Fed's speeches that we've seen recently and the rhetoric that's coming through is still a very hawkish tone. And that's where we may see now that, okay, we've got this divergence of what's gonna have an impact more. Are we going to see the hawkish rhetoric coming back into the forefront, and we see equity markets slide lower because of the Fed being more hawkish than anticipated, right? And raise interest rates at a faster rate? Or is it likely that they may take a dovish pivot at some point in the next month? And therefore, if earning results continue as they are, we may see equity markets move higher, and then the yields start to sort of balance and sort of, consolidate. But at the moment, they both are fighting each other, right? So we're seeing equities rally on earnings. At the same time, yields are rallying on the note that the Fed are likely to be very hawkish at the next upcoming meeting with rates. So that's the divergence or the divergent scenario that we're in at this moment. What's going to take? What's going to give is the key question next. Okay, so just looking across the board, what I'll do is let me just bring up the economic calendar. So I'm not going to focus on the microeconomic calendar, which is looking at corporate earnings for the week ahead. I'll announce for the week some of the key companies that I'll be looking into. But we're not going to go on the micro standpoint. We'll look at macros. Now, for the week ahead, if I do this week, okay, let me just start off on just the scenario today. Okay, so far this week, being almost the final week of October, is starting on a more positive note. We saw Asian markets overnight move higher, and that was followed by what we had is the Chinese GDP data. Okay, the Chinese GDP data quarter over year coming through at 3.9%. It is a greater number than the forecast at 3.3%. Okay, so an improved number there, right? But anyway, you know, both UK markets are opening up in the positive. US markets and the futures are also sort of, opening up in a positive mood. But this 3.9% figure that we've seen year-on-year figure, this is China's GDP figure. And you've got to remember when China's GDP figure were many years ago. So even though it's a marked improvement from the Q2 GDP figure, but at the end of the day, these are the lowest readings that we've seen in years. Okay, so these are very low readings that we've seen in years. Okay, so look at where we were in the prior years, right? Where the quarterly sort of GDP over the year figures were coming in say 2011. So if we go back, say, okay, let's just go back 10 years, right? So if you could go back sort of in this region here, around 6% or higher. Okay, so those were sort of the levels that were once being printed, but right now it's still struggling. It is still struggling. So that 3.9%, if you can see the previous, which was a massive drop, and that's due to sort of the restrictions that came into play with COVID. Okay, but okay, so 3.9%, an improvement from the prior quarter, but hey, looking at a multi-year view, these aren't very strong numbers. Yeah, but the market's taking it on a positive front. And as I mentioned, earnings season from last week, it's going to continue into this week, and that could help. And that's what's been cushioning the stock market. And we're seeing a broader rally occurring since we had the CPI result which came in 2 weeks ago on a Thursday. Okay, so today, the day ahead, I mean, it's largely focused on PMI. Okay, so we're looking at, globally, we're going to have PMI data being released. These are manufacturing and services PMI data. Now, what I might also mention at the same time, let me just bring it up, is this here. Let's try and quickly zoom in. So this was just released this morning. So we're just looking at, we hit the refresh button over here. So this is UK's flash services PMI data. Came in at 47.5. 48 was expected, came in lower than anticipated. And just looking at sort of where it is, look at the four that we're seeing, okay? So do note the midpoint is 50. So anything above 50 is expansionary. Anything below 50 is contraction, okay? So just zooming in a little bit more so you can see this. And we're just seeing a continuation to the downside. And look at the fall. These are sharp falls. These are not just, consolidation and a bit of a drop. These are sharp falls that we've seen consistently through this year to date. Okay, and it's likely to continue. So this is really showing us that there is a big concern in that region, in that sort of, in the results that we're seeing, the manufacturing PMI results, right? And it'll be good for you guys to actually read through this report and really understand, what's the reason behind this, right? So now, okay, yes, we're seeing business activity across the service economy decline for the first time in 20 months, and at the fastest pace since January 2021. Latest data highlighted that new orders fell at a stronger pace than business activity volumes as well. So new orders are being impacted. I'm not sure if you remember the original, Ari will know this, Ari shared this, but there was a flow diagram that shows what's being impacted next. And one of the areas that I mentioned is that to focus on is new orders next. Okay, so, and that's what we're seeing already in the UK. So new orders are falling at the sharpest rate. Staff hiring remains a relatively bright spot. So, okay, staff hiring is okay at this current moment. Input price inflation eased for the fourth time in the past 5 months during October. Okay, so the key takeaway will be sort of those key elements that was highlighted here, right? So the service economy and new orders. New orders is probably sort of a key point there. Now, also to mention is some of you may not be aware of what is this report, right? You know, how do I interpret this report? Okay, let's go through that also. And I like covering this as well because it refreshes me as well as gives you some insight. So on Investopedia, we're going to look into Purchasing Managers Index, defining how it works. Well, the Purchasing Managers Index, PMI, is an index of the prevailing direction of economic trends in the manufacturing and service sector, right? So it consists of a diffusion index that summarizes whether market conditions as viewed by purchasing managers are expanding, staying the same, or contracting. So that's the key point, is it's the view of those purchasing managers. Yeah. The purpose of the PMI is to provide information about current and future business conditions to company decision makers and analysts and investors. Scrolling through, okay, we don't need to know. I kind of mentioned the index. All you need to know in regards to the index is the 50 level. Okay, the 50 is the midpoint. Anything above 50 is expansionary. Below 50 indicates contraction. Something else to sort of mention here. Yes, the PMI and relevant data produced monthly by the ISM from its surveys are critical decision-making tools for managers in a variety of roles, right? So there is an example here. An automobile manufacturer, for example, makes production decisions based on the new orders it expects from customers in future months. Those new orders drive management's purchasing decisions about dozens of component parts and raw materials such as steel and plastic. Existing inventory balances also drive the amount of production the manufacturer needs to fill new orders and to keep some inventory on hand at the end of the month. Okay. Let me just have a quick look through. Yes, so this is an important one here. Why do investors care? Well, investors care because the PMI can be used to their advantage because it is a leading indicator of economic conditions. Yeah, the direction of the trend in the PMI tends to precede changes in the trend in major estimates of economic activity and outputs such as the GDP, industrial production, and employment. So this is a leading indicator, right? So the fact that we're seeing this substantial fall and this continuation to the downside is certainly giving some warning signal in the upcoming months. Okay, so yes, this morning so far, and across the board, we're going to have a lot of services and manufacturing PMI data, purchasing managers index data, these surveys that come from purchasing managers directly. And just looking across the board, I mean, you know, overall, the French came in at 51.3, but it was expected at 51.6. The Euro came in at 47.5. German came in at 45.7. Yeah, I mean, there's a lot of concern there, a lot of risks there. Okay, so we'll see what happens with the US manufacturing PMI this afternoon, which is expected at 51. Yeah. A couple of speeches to occur also. There are a couple of speeches to expect. Now, yeah, we've got MPC member Ramsden and they got Treasury Secretary Yellen. So those two speeches, but moving on from that, what else I want to cover with you is the next big scenario is, let me just bring it up here, is this. So we had a bit of an eventful political event occurring over the weekend. So we had, okay, so last week we saw Liz Truss resign. Okay, so Liz Truss resigned, and just to show how bad her tenure as PM went, put it this way, she's the shortest PM there's ever been, right? There was actually, she's the second shortest PM, but one of the PMs that came into power actually died, and that's why he was while in his role as PM, and that's why he's the shortest PM, shortest standing PM. And Liz Truss is number 2. And that actually happened with Kwasi Kwarteng being the second shortest chancellor. The first shortest chancellor also passed away while at the helm of that role as Chancellor of the Exchequer. But just looking at sort of the votes there, right? So if we just look at this. So trust issues. So things started poorly for Truss and then got worse. This is the net favorability of UK Prime Ministers, the survey response. So just looking at Boris Johnson's tenure, right? So, overall, he did okay. The pandemic bump for Johnson's approval. So during the pandemic, how we managed the pandemic. But thereafter, there were a lot of errors that started to, come through. Most importantly, obviously, the Partygate allegations of a lockdown parties, right? And that really brought his tenure down, where he had to resign. Now, then they went on to sort of, do a 1 month hustings, an event where Conservative members will be able to listen to key MPs who are running for PM role from the Conservative Party, and then vote. The vote came in. It was between two people, Rishi Sunak and Liz Truss just beat him by a very small margin. But then very quickly, you could just see, the dash for growth that she was looking for, with all of this fiscal stimulus offers that she put onto the cards, with that supposedly mini budget, which was actually the second largest tax cut in history. That just had an abysmal time in the markets, right? Where we saw the pound fall, the gilt markets being impacted, pensioners' funds going close to bankruptcy, where the Bank of England had to bail them out and offer a sort of QT in a time of high inflation, but quantitative easing for a period of time. This is what happened to her, the survey response. She completely fell out of favor, and therefore she had to resign in a very short period of time. So she stood for less than 6 weeks. She did 44 days exactly. So she had to have a meeting with Sir Brady, who is the chairman of the 1922 Conservative Party Club, and he had notified her that it's beyond it, right? So the vote of no confidence are beginning to come through, and they're coming in at a much larger pace. You've got to resign. So she's going to resign. Now, the next step is they don't want to go through that same long process of, okay, let's see who we can bring into place. Okay, so let's see. I'll smooth this out the way now. I need that. But let's see, let's go through another hustings and, let's spend another 1 month in deciding who we want to bring on board, right? No, this is going to be a fast track to becoming a PM. And the fast track is this. In 1 week, by the end of this month, they're going to make a decision, right, of who's going to be the next PM. The way it's working is going to be through online votes, if it comes to that. But at the moment, what it's looking like is who's running for it, right? The MPs have to step up. I'm going for it, right? Now, when Rishi Sunak come through, he's put his hat into it, and Morden also said, yeah, I'm going to be running through as well. And they need to get to the 100 votes. They need 100 MPs to back them. Out of nowhere, we saw Boris Johnson, who was on a holiday in the Caribbean, fly back and said, I'm going for it. So over the weekend, he made a lot of calls to other members, and he's decided not to go ahead. He's decided not to go ahead. Now, we know that he's not going ahead over the weekend, so that puts Rishi right at the front. He's the front runner in this case. Now, what could happen is, if it's just one-sided, where Morden isn't able to get the 100 votes she needs for it to go to the vote for amongst Conservative members, then we could see Rishi Sunak just taking the place without going through that voting system, right? Because all the MPs are on one side, and that's what it's looking like, right? So, it does mean that Morden has to achieve those votes very quickly. She needs to get 100 votes very quickly, but the front runner seems like it's going to be Rishi Sunak at this point, right? So yes, the UK political sort of scene is certainly high on the agenda, especially everything that's happened over the past few weeks with, talking about the gilt markets, the LDIs, the liquidity-driven investments that were being massively impacted by the gilt markets, and then, what's hosted behind that, right? So there's large funds, pension funds, that are being impacted by the gilt markets, and that's why the Bank of England had to step in, which could have caused a significant crisis, right? But okay, so let's see what takes place in regards to that. For the week ahead, get rid of that for the time being. I can get rid of that. We've also moved that to the side. I want to finish off reading. For the week ahead, okay, so we spoke about what's taking place for the key day today, and UK politics will be in focus. But as I mentioned, it's certainly going to be a busy week ahead for corporate earnings. Okay, it's certainly going to be a busy week ahead for corporate earnings. We've Investors are going to expect results from some of the world's largest multinational companies. This will include tech giants such as Microsoft and Apple. So we've got an wide array of sort of, earning reports expected. Most in focus will be probably Microsoft and Apple. That's my opinion. Moving on, we also will have, as we go towards the end of the week, we'll have Bank of Canada with their monetary policy report, as well as their rate statement and their overnight rate. So we're expecting a 50 basis point rate hike from 3.25 to 3.75. You could also look at crude oil inventories. That there's obviously a focus there with OPEC plus, taking down a couple of percent of their total global supply reduction limits. And then we've seen the SPR reserves, US reserves being used at this point here. So there's a real battle going on in the oil field, oil markets. And then going into the Thursday, what's going to be in focus is certainly US GDP figures, so the quarter-on-quarter GDP figures. I might do a breakdown of what that means, similar to what I did with the PMI at a later date. And then as we go into the end of the week, mostly it's going to be focused on maybe the consumer sentiment index that comes out most at the end of each week. So the University of Michigan consumer sentiments, as well as the inflation expectations. But yes, UK politics will come into the focus today, and if it continues to the rest of the week, we'll see what takes place from there. It is likely to bring a bit more stability, in my opinion, in regards to the pound and sort of other sort of markets as well. Going into sort of the midweek, just being focused for the GDP results that we expected for the US as well. But the focus, as I mentioned, is that divergence that we're seeing. Monitor the US yields, whilst at the same time see what is taking place in the earning reports on an ongoing basis. Okay, these earning reports are going to give us an indication how these corporations are faring in the current market conditions. Okay, I think that will sort of wrap things up, really. We'll keep it short and sweet. We'll do more of a technical session shortly at some point this week.